Video opens with a fast-paced montage of S&P 500 charts surging upwards, interspersed with sleek futuristic data visualizations and digital stock tickers. Upbeat electronic music plays in the background. A text overlay appears. 2026, the market's new peak. The horizon of finance is shifting, and all eyes are on 2026. After a period of unprecedented volatility, market analysts are pointing towards a new zenith for the S&P 500. Projections suggest that the index is not just recovering. It's gearing up for a historic climb, potentially reaching record-shattering new highs. But what is fueling this powerful ascent? And what does it mean for investors watching from the sidelines? The journey to the market's next peak is paved with technological revolutions and enduring economic strength, creating a landscape of both opportunity and risk. Scene shifts to dynamic visuals of advanced robotics assembling products, glowing neural network animations, and close-ups of complex semiconductor chips. At the heart of this optimistic forecast lies the undisputed engine of modern growth, the AI revolution. What was once the domain of science fiction has become a cornerstone of corporate strategy and a primary driver of market value. Tech titans like Nvidia, Apple, and Microsoft are not merely participating in this wave. They are creating it. From generative AI transforming industries to the intricate semiconductors that power our digital world, this technological surge is unlocking trillions in new value, propelling earnings and investor confidence to new heights. Animated charts appear on screen, showing upward trends in corporate earnings and positive revenue projections across sectors like tech, healthcare, and consumer goods. This innovation is translating directly into robust corporate earnings. Across the board, companies are demonstrating remarkable financial health, with many reporting stronger than expected profits and issuing optimistic guidance for the future. The resilience of the American corporation is on full display, proving its ability to adapt and thrive. This fundamental strength provides a solid foundation for the market's upward trajectory, assuring investors that the growth is backed by tangible performance, not just speculation. The scene transitions to visuals of busy shipping ports, global trade routes lighting up a world map, and shots of confident consumers shopping in bustling city centers. Beyond the tech sector, the broader economy is showing signs of remarkable resilience. Despite global headwinds, consumer spending remains confident. Supply chains are stabilizing, and international trade continues to flow. This underlying economic vitality creates a fertile ground for sustained market growth. It signals that the rally is not isolated to one sector, but is supported by a dynamic and interconnected global economy, ready to fuel the next chapter of expansion and prosperity. An analyst character appears in a modern office, pointing to complex data charts on a large digital screen. The charts show sustained growth potential and a list of upcoming IPOs. This confluence of factors leads us to the big question. Is this the last chance to invest before the next major bull run? The bull case is compelling. Analysts point to continued growth potential, arguing that the AI-driven productivity boom is still in its early innings. Beyond the mega-cap tech stocks, a rotation into undervalued sectors, or value stocks, is gaining momentum, suggesting the rally could broaden significantly. Furthermore, a pipeline of exciting new IPOs promises to inject fresh energy and innovation into the public markets, offering new avenues for growth. The screen splits. On one side, we see the analyst. On the other, visuals of rising bond yield charts, and graphs depicting sharp, volatile market swings appear. Text like market correction and analyst caution flashes briefly. However, no bull run is without its bears. A chorus of cautious voices warns of significant risks on the horizon. Rising bond yields could draw capital away from equities, making stocks a less attractive investment. The very speed of the market's potential ascent has some analysts forecasting increased volatility and the possibility of a sharp, albeit temporary, market correction. These experts advise prudence, reminding us that an overheated market can be unpredictable and that past performance is no guarantee of future results. Geopolitical tensions and unforeseen economic shifts also remain as persistent wildcards. The final sequence shows a montage of a thoughtful investor reviewing charts on a tablet, looking out a window at a city skyline. and finally making a decisive click on their device. The music swells and then fades as the video closes on a powerful, sweeping shot of the New York Stock Exchange at dusk. The screen fades to black, with one final question lingering for the audience. So, as the market stands at this pivotal crossroad between a historic new peak and a potential correction, the decision rests with you. The data is on the table, the forces are in motion, and the future of the market is being written in real time. With the promise of 2026 looming, the world is watching. And the next move is yours. Text on screen, your move,